this war happens on the weekend, and the the American carriers with their bombers just rain missiles on Iran, and Iran shuts down the Strait of Hormuz. Let's just say that happens. How much oil goes through the Strait of Hormuz? 20 million barrels a day. 20 million barrels a day of oil. So that goes to surplus, right? Plus another 16 gone. So like, I mean, it's a complex situation. That's why, like, me and you were talking offline. We were looking at the oil price, and I mean, like, it's going up a bit, but hell, silver is going up more than oil right now. Silver is, I think, up today 7%. Vince Nancy, Josh Fair, they got more direct access to this information. They have been saying that China's physical silver supply chain, like I'm talking about silver concentrates from Latin America, is probably disrupted. That would explain why, the Chinese vaults are draining, right? Without major replenishments. Now, this is the first time I'm saying this on any channel, okay, to your audience. So I'm first time I'm explaining this, okay? So so that's the very definition of a dislocation.
Surfer, but like to become your best friend. Balances in your bank and stack. What's up, everybody? I'm Jared, the Stacking Surfer, back with another awesome interview. And today I've got Eric Yeung with me. You can find him at X at King Kong 9888. Eric, welcome to the show.
Hey, thanks, Jared, for having me back on your show.
I'm glad for you to be here. Well, we've already been talking a little bit in our pre-conversation about a lot of stuff, so we're going to dive right into it. What I want to help a lot of people understand today is there's a lot of information out there about the COMEX. What does it mean? Is it going to blow up? Are we going to see silver hit some astronomical number like $1,000 this year? Are we going to see it maybe hit 300 or 500 like some people are calling? There's a lot of conversations around why is the price of silver higher in Shanghai than it is here in the US? And, why is that there? And what's happening and what could that mean? We've had conversations coming in from the US vice president talking about putting a floor to silver so that it doesn't leave here. And I've got a couple points about that I think we can hit too. And then in general, we just have a lot of different philosophies and belief systems about silver here in the US versus China. So Eric's our expert here from China to kind of help us with that a little bit. And Eric, where I want to start off with is I just finished last week with a couple friends having a booth at the Long Beach Coin Show. So I believe it's the biggest coin show we do on the West Coast, or at least here in California. One of these days, I hope it'll be as big as like the fun show they do in Florida, where people come from all over the country to visit it. This one has a little bit less or fewer people to it. But what we were able to do is we were able to buy a lot of silver, and I mean a lot of silver. I don't want to give any numbers on here, but we bought a lot of silver at $7 below spot, and so we were buying in the low 80s, and people were lined up. And they were selling this high quality product that I know they paid well over spot for. Really nice looking bars, silver eagles. We even had, I think, a handful of vintage bars that came in too. Why are people in the US selling all this silver compared to what's happening in China? And I want to talk about that a little bit. So tell us what's going on in China. Are people unloading all of their silver? Or are they doing something different?
No, I mean, China, like I was telling you that, like, you read comic books, me too, right? So I'm just gonna dive right into it. Imagine China is like the reversal world of the US and the West. What I mean by that is I'm just gonna list some examples for your audience and they'll get it. They might get a giggle out of it. Okay. So like in China, for like people, regular people buying gold and silver, we just buy it. It's like just, it's like a gut feeling. We go and buy it. I consider myself pretty knowledgeable. I know what's happening behind the scenes. I buy because of that. But a lot more people, they just buy it because, they feel that something is wrong, that their fiat, currency is being watered down. Okay, so it's like a primal kind of drive that makes them buy the physical gold and silver. So that's the common people. But what I see in the West until recently is that, like, because I got a lot of friends like Brian on X, he owns like a coin shop out in Florida, and he tells me that until recently, until the last couple months, most people in the US have been selling their gold and silver, especially silver. I mean, like people were digging up the drawers for like grandma's like silverware, and they were selling it. They still are. Okay, some of these guys. So like that's what I mean. Like that's point number one. That's reversal number one. Okay, Asia we buy the physical gold and silver regardless. In the West, you guys, I guess you guys sell. It's kind of like, I guess it's because you have been rug pulled so many times, right? That might be the reason. So now that silver is kind of breaking out, a lot of people are selling. So that's what I see for the common people. For mainstream media, it's kind of reversal as well because your mainstream media like denies everything. Like they don't want the regular Joe to buy gold and silver, right? They always pour cold water on it. That's your mainstream media.
When you talk about mainstream media, that includes like CNBC. When you look at the big CNN, CNBC, when you look at Fox News, when you look at any of the big news stations that even cover the markets, they don't like gold and silver. They'll talk to you all day long about Bitcoin and cryptocurrencies, equities. They'll even talk to you about maybe oil being depressed, which I think we'll hit a little bit on today too. But they really never talk about gold and silver much unless it's a huge explosion in a short period of time, and then they tell you to hurry and sell because it's going to crash back down.
Yeah. So in China, it's the reverse, right? Our CCTV, which is our government, TV station, and also TVB, etc. TVB is Hong Kong's biggest TV station. Whenever you hear about gold and silver, it's always positive. Okay. So especially for gold, because that's not industrial. They want people to buy more gold. And it's always good. Like they don't tell you to rush in and chase the momentum, but they tell you to dollar cost average, like what I tell people. So that's like number two reversal, right? Like I said, reversal world. So you have the US mainstream media saying gold and silver bad, bad, bad. In China, mainstream media, gold and silver, good, good, good. Okay. So now, thirdly, you have the alternative media, like guys like me and you, like Andy Jackman, Miles Franklin. Okay. Like, I consider myself, one foot in the West, one foot in Asia, but like in the West, your alternative media is mostly positive towards gold and silver, right? Because you guys, you're the people. You don't want to see people get hurt, and you tell people the truth. You want people to buy gold and silver. But like, interestingly enough, in China, like the you know quotation marks experts, they 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 don't say good things about gold and silver. I mean, every step of the way, they say it's like a potential trap, rug pull, etc. They're still doing it on on our X, which is Red Note in China. Okay, so it's our social media. They basically on a daily basis say bad things. I shouldn't say bad things, but like they would say we are like at a peak. There's no silver shortage. Gold might take a U-turn, like all that stuff, right? All that stuff that your mainstream media says. So I find that interesting, and I spent like a lot of my time debunking. Um, I don't want to say lies, but like maybe misinformation that they are pumping out. Like so, I spend a lot of my time in China on Red Note doing that because a lot of stuff that they talk about, like their COMEX analysis, is just totally wrong, like completely wrong. Okay, so that's what I do. Yeah.
Yeah, looking at that, there's a couple things I want to do. One is I want to just remind everybody, go ahead and hit that subscribe, the bell icon, and also the thumbs up. That makes it so more people will see the message here because it's super important, guys. What Eric's describing here is we have it's not even we need a paradigm shift here in the West. Okay, is what we need. But what Eric's really describing is he's describing a phenomenon here. So you've got the Chinese government is buying a lot of gold and silver, and I'm going to pull that screen up here real quick to share with everybody. So years ago we had a very large trade deficit where, as having the reserve currency, the United States, our export was US dollars to other countries. It allowed us to buy goods for way less money than it would cost us if we made them here in the United States. There's a few consequences to that. It drove all of our manufacturing out of the United States, but it brought in very inexpensive goods. What that also did is that gave a lot of other countries, including China, a lot of US dollars to hold on to use at a future time. And so you can see in this chart here that difference. And I'll have Eric talk about that in just a second. But what's happening, in my opinion, is China wants to have as much gold and silver in their nation's boundaries as possible. So they are very pro buying gold and silver as a nation. And they're also encouraging their citizens to do it. Now you move over to the West here, especially in the United States. I think we're still working with our previous administration when you look at the media, and so I think they're still trying to push their narratives. And one of those narratives is not being self sovereign. It's not about having being your own bank. It's not about having wealth. It's about keeping in the debt system, and I think that even goes to more globalism too. And so I think what you're seeing here is we're having to break out with YouTube and X to help inform people about what's really going on out there, because our our media systems aren't doing it. They're still kind of captured. They're still bought off by these other organizations that do not benefit from us having our own wealth. So Eric, maybe you could talk about that just a little bit, but I'd love to have you talk about the chart here. So this is the chart that shows the shift from U.S. Treasuries down from 29% down to 7.3%. And then you're seeing the gold holdings in China going from a very low percentage. It looks like it's close to zero all the way up to 35%, if I'm reading the chart correctly.
Yeah, so basically, you see like a reversal, right? Like again, like today's theme is kind of like a reversal world. So that's interesting, right? Like I mean, like China basically, I don't have the chart with me today, but there's another chart that the US Treasury actually like distributed right before Chinese New Year. So they finally admitted that China has been net selling US Treasuries. Okay. Like before everybody just argue, right? Especially the milkshake guys. They say it's just mark to market nominal dollar decrease, which is complete BS because the US Treasury came out with a report saying that China actually sold, okay? They use that term, selling, couple $100 billion of US Treasury bonds, notes and bills. So mostly bonds. So anyway, like you said, Jared, China decreased its US Treasury holdings from 29% to 7.3%. And in terms of gold, it's the reverse. It went from less than 5% to now more than 30% of the foreign reserves. So that's what this chart shows you. Okay. Of course, somebody might come along and say, "Hey, Eric, some of that is gold price appreciation." Fine, it doesn't matter. It's both. Okay, they've been buying tonnage, and the gold price, quadrupled. Okay, that's fine, take both into consideration. On top of that, if you read the Goldman Sachs report just several months ago, they were saying that the official Chinese gold figures, like whatever China officially tell us that they're buying, take that and multiply it by 5 or 6, or in some cases by 10. So, I mean, like, this chart right here, what this means. Don't even show us like the extent of the actual Chinese physical gold accumulation. So that's the story.
Yeah. So looking at this chart too, it's the steepness of the changes, right? So if I look at it, it looks like it goes back to maybe 2007 or so is when we had a reversal of U.S. debt being held by China. Andy Scheckman and others have talked about this Operation Sandman potentially happening. I'd argue it's already going on. The idea of Sandman is that we're going to wake up one day and all of the BRICS nations have dumped all of their U.S. treasuries all at the same time, causing a massive gloat on the bond market and basically collapsing the bond market and causing the U.S. dollar to fall quite a bit. Um, it's already been happening at a let's say more slow pace that a lot of people haven't noticed, and you can see that in the chart here. And then to your point, Eric, what you can see too is you can see gold skyrocketing up. So it probably is a combination of purchases as well as appreciation, but it doesn't matter because it's a percentage of total holdings, right? So it's irrelevant if it went up because of price, and it probably went up because of their holdings and accumulation started to push that up. But looking at that, I want to jump over to this other screen real quick. All right, so we've got this from your X post here that talks a little about how the LBMA, the COMEX, China and India work. But I'd love to have you explain this a little bit to people too, because I think right now there's a lot of sentiment that on the 27th, okay, which is today, so today is the 27th of February, that we're going to have an announcement about how much how many contracts are going to be asking for delivery in March, and that this is going to blow up the COMEX. It's basically going to cause a complete meltdown, and we're going to see the price go skyrocketing up. Is that possible? How does that work in reality? And is it something that's maybe a little bit different than what maybe people have in their heads?
Okay, first of all, I'm like, I'm going to speak as in broad numbers, okay? Because like specific numbers doesn't make any sense in this juncture because every day the numbers change. All right? Like we know that. Like because every day when you log into the CME website, the numbers change. Okay, so I'm just gonna speak in broad numbers so that and the rules well, the rules don't change, but like they massage the rules, okay? Let's put it that way. They like you like that word, massaging, right? Anyway, so my the whole point here is that there's a lot of physical silver demand and gold demand at the COMEX. Now, there's a lot of paper too. Okay, you got to realize that. So, like, if you look at, like, for example, the March contract, we don't have the final figures yet because today is first notice day. Okay, so that's when the parties that want delivery um, you know, notify the exchange. So they pair them up. And then you have the issues and stops report, which is the issue guys are the guys who will deliver, and the stops are the guys who accept the delivery. Okay, so that makes sense. Anyway, my whole point is that um, if you look at March, I think what will eventually happen is we'll probably have. I'm just guessing. Okay, so don't shoot me. Okay, your audience. Like based on what I'm looking at right now. So I'm thinking maybe 6,000, maybe 6,000 to 7,000, maybe 10,000 contracts standing for delivery. Now, how much of that is actually withdrawing metal from the vaults? you know, Given the situation that we're in right now with the tightness, I know there's like left hand to the right hand situations. Okay, which means they take the delivery, they might not necessarily withdraw the metal. I know that. Okay, so what I'm telling your audience now is maybe 6 to 10,000 deliveries, and maybe 60 to 80% of that withdraws because of the tightness that we're in right now. Fair enough. I think that's fair to say that. That's why I'm like, I'm not saying stuff written in stone. We're just, based on what we can see, make intelligent assumptions and conclusions based on that. Okay, so
What's the consequences of it?
let me just like put like, again, step back a bit. Okay. So total contracts though is what? Like, a couple days ago. It's at around 36,000 contracts for March. We're down to 6,000 now. Okay. So like if there's like 6 to 8,000 Deliveries out of, let's just use 36,000. Okay. Um, that's 1/6. Okay. So like what, around 20%? Am I correct? 1/6? A little less? Okay, hold on. Yeah, 16%. So 16% of total contracts standing for deliveries, and withdraw maybe even less, right? Maybe around 12, 13. So that's pretty much in line with historics, maybe a little bit higher, right? Maybe 30, 40% higher. So people need to remember that, right? When they look at these numbers, that, you know, I mean, yes, 2 days ago they stopped the exchange. And during that stoppage, in that 90 minutes, they did, like, me and Mario went through this. They did more than half of the entire day's volume in 90 minutes. Okay. So basically, what I'm trying to say is that a default at the COMEX is highly unlikely, because they always find ways to convince the contract, like the longs, okay, to settle by cash, one way or another. Okay. So am I right? So like me and you just did rough calculations, right? Like, given like the tightness right now, we're seeing around 15%, 16% deliveries. That's pretty low, like if we're correct, for like the level of tightness that we're seeing globally, right? But then it kind of makes sense, because they stopped the exchange for 90 minutes to convince people. Or like, Vince Nancy said to match it up. Fine, right? That's more in line with what the establishment like to say. And it's not wrong either, but I like the way I say it, which is they convince people, okay, within that 90 minutes to take the cash instead of taking the physical metal. So, sorry, go ahead.
So I was going to ask, so what would happen if it did have a default? And to your point, it's kind of like a pressure cooker where it seems like they have a lot of different mechanisms to let the pressure out, and people keep expecting it's just going to blow up. And so the reason I think it's an important conversation is people are expecting that it has to blow up for it to mean, be a bullish sign for silver and for it to really take off. And I'd argue that that doesn't have to happen. We can continue to have this going on for a very long time, like it is. But could it really blow up? And if it did, would that really make a massive difference quickly, or would there only be a percentage of those people that really still need the physical silver? Some of them are just really playing the futures market to make money. They don't actually need the physical silver for whatever industry they're in, or whatever business. Now, some of them do, and those I could see rushing if all of a sudden they're not able to get the silver. Um, what do you think would happen in those cases there? What's your real concern, and what does it mean, for kind of that macro landscape going forward with silver price and supply and demand?
Well, I mean, the open interest, which is the total number of contracts, have been going decreasing, right? That's the total number of contracts for all months. Okay, so like the front month and all the futures months combined has been going down. So, in my opinion, that's just really the bullion banks unwinding their short positions. Like you said, the longs, some of those guys are gamblers, sure. But one way or another, especially because the CME keeps raising margin requirements, that I believe probably has been shrinking as well. So what I'm trying to say is that both the longs and the shorts, like amounts of contracts, have both been shrinking. I mean, that makes sense, because, like, again, open interest is one short and one long, makes up one open interest. So if you have, yeah, exactly. So if your total interest going down, total open interest going down, then that means both longs and shorts are both decreasing, right? So to your point, I think the physical, like the real physical demand guys, like the guys who are holding long positions who really, really, really need the physical metal, they're still there. They're not going away, right? So that's why I see a sustained move, upward move of silver prices at the COMEX. Okay. Because again, the COMEX doesn't, it's not like a standalone entity. If you look at the charts that I drew, I guess, year and a half ago for everybody, for your audience as well. But I think, yeah, you got it on screen. Okay. So like the COMEX is not a standalone entity. It's connected to the LBMA, the ETFs, and indirect, well, direct and indirectly with China and India as well. So off camera, we discussed how the SGE, Shanghai Gold Exchange, Shanghai Futures Exchange in China has been draining. It's now below 800 metric tons, like, of physical silver at their combined vaults, SGE, SHFE combined. Okay. And LBMA, I don't touch that because, I don't know if I told the audience, but unreliable numbers, right? Like, if you remember back last year in October, 2 weeks before October, they said they have 5,000 metric tons, and then Robert Gottlieb came out in October and said, "Guys, we're down to zero." so, so I don't like. I mean, like, I'm sorry, but like, I can't take the numbers seriously. Okay, so no LBMA numbers. China is draining, and so that's just like on the surface level, right? Looking at like these exchanges globally, but like if you look at what's happening politically, what is happening? I mean, the U.S. is trying to reshore the refining, like the refining capacity of physical silver, of refined silver, 999 silver, back to the U.S. That's why they did that deal with Korean Zinc, and like between Korean Zinc and the War Department, right? Pentagon. And I think JP Morgan financed that project down at Tennessee. A lot of people, they don't know. They say, well, it's not really a new plant. It's just like a expansion. Those guys don't know what the heck they're talking about. Okay, because like that old plant is basically trash, unusable. They're building a brand new state of the art, yeah, brand new plant at the old location. Why? Because at the old location, they need to go through a lot less red tape, environmental stuff. That's the reason. Okay, so yeah.
Well, and to your point there too, Eric, though, is that's what's happening now, right? We're going from a mono world of the United States having this empire that's all over the world, and everybody's using our dollars to. We've now got a split between the East and the West, and it's starting to play out in resources. You've got Venezuela, you've got everybody vying for Central America, South America, and that's between China and the United States. There's a lot of different natural resource countries that have a lot of reserves, especially in silver. You look at all the production that comes out of Mexico. You look at the reserves down in Peru. People are eyeing these things, and so one of the issues that you bring up now is China refines, I think, like 70 or 75% of the world's silver annually. um, we don't do very much of that, right? So if we're going to be taking on silver and we're going to make sure that we're going to bring manufacturing home and we're going to be utilizing it, especially for what I call the war on AI, which is who's going to get to, the real super AI fast? Is it going to be China or the United States? It becomes a chip game. It becomes a silver resource game. It becomes a silver refinement game. And so, to your point, these things are hugely important. And so, to me, it feels like the countries are kind of slowing each other down. It's not really, it's not a real war. It's more of a kind of a cloak and dagger of slowing things down while the U.S. tries to get, you know, infrastructure in place. And I think that's what you're describing right there. Is with this plant, it's the U.S. has to have a way to refine their silver, or we're gonna lose.
Well, you know why you guys ship all your silver refinement, like, that process to China? Not because you love China. No, because of the cost, Jared. Yeah. Because think about it. For the longest time, like silver was languishing between what, $15 to $30? Like that's dirt cheap, right? So like there are not that many places in the world that can do like the refinement process for dirt cheap. China is one of them. So that's why China took up 70, like you said, 70% of the global silver refinement, smelting process. Okay. So for the US to bring that back, you can't have dirt cheap silver. Like my estimation is that for the US to bring, like, to successfully bring back a lot of this refinement onto US soil, you need the silver price to be above 100. Okay, people don't understand the process because, like, you look at the silver mining company. I mean, a lot of my followers keep saying this. They're saying, why isn't ABC, I'm just hypothetically speaking, whatever mining company, why aren't they selling the silver at spot price? Because that mining company is not selling pure silver. They're selling silver concentrates, right? That are not like refined, right? So, like, let's say the spot price is at $90, let's say. Your miner is going to sell it at, I don't know, maybe like 75, 60, 65, 69. In the case of First Majestics, I think 69. Why? Because your smelter, your guys in the middleman going to make money. Okay? They are not going to do it for free. Okay. So if the silver price is too low, you got margin compression like throughout the entire value chain. I'm sorry, Jared. Sorry, guys. You guys got to take all that and give it to China. But that's not what the US government wants to do, right? The US government wants to reshore this. Therefore, the silver price, I'm not saying that they are going to be successful. I don't know because these are market forces. But if they can have it their way, silver should be above $100. That's for the US government, not the bullion banks, okay? Separate, totally separate situation there with the bullion banks. But the U.S. government should probably want silver above $100 so that they can bring back that refinement, you know, um, supply chain back to the U.S. Make sense?
It does. So, Eric, let's hit that point real fast. So, a couple things that I hit with Andy Scheckman too. So, one, um, watching the COMEX is important. What we're starting to see is they've got mechanisms to release valves, okay, to keep things from blowing up. And they're pretty resourceful, like a lot of the bankers have been on kicking the can down the street, if you guys understand all those concepts. So basically, what that means is instead of everything just exploding all at once, it kind of slowly lets all the steam out, which for us is going to make price go up. We can have things that break. We can all of a sudden wake up and banks are broken, and there'll be something new there. Black swans can happen. The COMEX could do force majeure and decide, hey, we're not going to let any silver out. And I think, Eric, what we kind of covered here too, just as recapping for everybody, is there's going to be some speculators that will just leave the market. They'll have their tail between their legs. They'll take their cash. They're out. They're kind of done. But the people that really need, or corporations or countries really need their silver, they're going to have to go and find it somewhere else. And that is extremely bullish for silver price going up. And I think that's when you hear people talking about the COMEX blowing up, they use the force majeure, which means that they're going to be forced to pay out cash instead of instead of silver deliveries. That's what they're really talking about. So it doesn't mean that COMEX as a company goes bankrupt and it's gone. It means things are going to change a little bit, and it depends on if people want to continue to play futures or not, because they're only going to be getting cash. They're not going to get the physical. So those that need physical are going to have to go find it. And if the market doesn't have a huge supply of that ready for them, then they're going to be paying a lot more to get what's available. Do you have anything to add to that? And then I want to make one more point.
Yeah, I do. I think, like, if you look at my chart there, I think there's I'm going to use the word that they use, Robert Goddard, Josh Fair of like Scott Stillman, Vince Lancy. They use the word dislocation. So I think on top of the physical silver shortage at the COMEX, which you can agree with me or not, based on the numbers. But like, if you look at the global situation, it's obvious that China at the SG and the SHFE has been bleeding silver. That's abnormal because in the past, China get a lot of their silver concentrates from like the entire world, but especially refined silver from the LBMA and silver concentrates from Latin America. And with China draining silver like that, that tells me two things. LBMA is probably not shipping a lot of silver to China for whatever reason. And Latin America probably having some issues there. I mean, look at like what happened to Venezuela. Okay? Like the US just basically said, now we are like we control in Venezuela. We're watching over. Like I think the US want to own the entire American continent. Okay? I mean, Vince Nancy, George Fair, they got more direct access to this information. They have been saying that China's physical silver supply chain, like I'm talking about silver concentrates from Latin America, is probably disrupted. That would explain why, the Chinese vaults are draining, right? Without major replenishments. Now, this is the first time I'm saying this on any channel, okay, to your audience. So I'm first time I'm explaining this, okay? So so that's the very definition of a dislocation, right? Like, that's how you put it politely. So China wants the raw silver, probably can't get it because of the or not get enough of it, right? Let's be fair. They're getting it, but probably not enough for them to have a major surplus. And the US, on the other hand, they have access to Latin America for sure. That's the backyard, right? It's right there. But what is the problem of the US right now in terms of silver? They don't have the refining capacity, you see. See, so that's like the very definition of a dislocation. And I think until this situation resolves, which means the US has sufficient refining capacity, and China, somehow discover a whole bunch of new mines or have like, new deals with people who are closer to them. I don't know, Malaysia, Indonesia, Philippines, whatever, silver mines, okay? I don't see how this refined silver shortage is going to resolve itself. That's why, another thing, Gerard, that's why I think China implemented refined physical silver export controls on January 2026, right? A lot of people say it's a nothing burger, but I mean, if you zoom out and just look at everything I just said today, it makes sense. Because if you can't get sufficient, raw silver coming in, you're not going to want to ship out all your refined silver, right? It doesn't make any sense.
Well, you're not. So that's kind of where I talk about the slowdown, right? So maybe dislocation is a better term too, more professional term. But um, basically, everything's shifting. So we're shifting manufacturing back to the U.S., which is going to change things in China and it's going to change things in the US. And as far as silver, this is exactly what's happening. This is what we're talking about. There's a lot of jockeying for, the US and China are both fighting over Brazil. There's other countries in South America, right? You've got Mexico with the cartel stuff that just went on that was freaking people out. And then I think a lot of people just went straight to, hey, they're going to take the silver mines. I don't think that's why they were doing that. One of their leaders got taken out and they're not very happy about it. But there could be some issues there with silver mines if they decide to shut things down or they want to hold it as a card. Um, and I don't have all the evidence there, so maybe there's more to it. But it's a dislocation of what's been happening in the past, and so it's going to take time for everything to get back into place. But I think the real thing that's going to be interesting going forward, Eric, is what you just hit upon, which is once the U.S. has its refining capacity created or available, and um, what happens next. Now, who gets their hands on the silver? How do these negotiations go down? And do you have two big players bidding prices up with these negotiations, or do they take things? Is it a strong negotiation, like, hey, we're going to sit here in your country and occupy it, or is it going to be more of a monetary and a business relationship? But either way, what I see is huge demand for silver, especially from these two countries, which really kind of represent two different sides of the world. I think that could really drive things way up. And so when I look at your chart here and you see China and India going down from the LBMA, is there a place that you would add the United States as we start to refine more? Would we be added to this chart somewhere?
Well, you are there already. You are the COMEX and the ETFs. That's the US right there.
But as far as draining those into manufacturing.
Oh, okay. Well, like, the US basically owns the LBMA, the COMEX, and the ETFs, right? I mean, I use the word own very loosely, but like, no, so don't shoot me, okay? People are gonna say, well, LBMA is in London, England, okay, whatever, right? Like the US empire, okay? Like, I mean, influences all three locations. So if I have to draw a bubble, the US would just encircle the LBMA, the COMEX, and the ETFs. So like, anyway, my whole point is that until the US get its refining capacity up and China and India find new sources for raw silver, I think this squeeze is going to continue. Like, for lack of a better word, okay? And to your point, let's say the US has the refining capacity. It's not going to be within the next 3 years, okay? So you're talking about 3, 5 years down the road. I don't think silver is ever going to drop below $50 again. Let's put it that way. Maybe not even below 100. Why do I say that? Exactly what I just said earlier. Um, the US, to operate these refinements of silver refining supply chain efficiently, you can't have silver being too cheap. Okay, you got to pay all these middlemen. Okay, so I think very possible that we break out 100 again silver, we overshoot to whatever price, and then in 3 5 years, when the US has sufficient refining capacity, we drop that back down, but it's nowhere going to be near where the previous low was, which was like 20 something. Like, people still talk about $30 silvers. Like, I don't think we're ever going back there again. It's a different world now, right?
Well, I saw some people saying $15 silver on X, and I'm like, you guys, the only way we get to $15 silver is if we have a complete deflation and everything implodes. And everything goes down and there's just no demand for anything whatsoever. All your mines close down. I mean, there's no production. So be careful when you see these crazy numbers out there from people, because what Eric's describing right now is the reality. Like, there's cost to doing these things, and if it goes below it, then it just shuts down, and then supply dries up, and then the price goes back up. It's supply and demand. I mean, it's how the world works. So, Eric, I want to shift gears just a little bit and pull up on to stage here the chart from the post you had from Martin Armstrong that talks about U.S. national debt set to rise 2.4 trillion a year in the next 10 years per year. That's insane.
Yeah, so I mean, like, the people who want to are really afraid of holding gold, just look at this thing. The US has had what, almost $39 trillion of national debt. That's not even including the unfunded liabilities, okay? Let's not even go there. Just talk about your national debt. Almost $39 trillion. And Martin Armstrong is talking about adding $2 trillion per year, 2.5, and probably accelerating. Come on. I mean, what else can you hold? Gold. That's it. Okay, silver. Okay, like, I'm always a little bit hesitant with silver because I think silver is great and historically is a monetary metal, but it's so important nowadays for industries, right? That, like, I think it'll overshoot. It'll probably get, I don't know. I'm just throwing a number out there. Maybe it'll shoot above 100. We already at like 94 right now as we speak, by the way. Okay, so it might, like, shoot past 100 again, past 200, past 300, and then drop back to, like, I don't know, 120, 150, something like that, right? But gold is a completely different ballgame, because I think what's gonna happen is, if gold gets to, like, let's say, 8,000 US dollars this year, which is very possible, okay, the US government potentially, and I'm not saying this because I'm a wacko or like tinfoil head guy, okay? Judy Shelton is saying it. Judy Shelton talked to Scott Bessent recently about this, okay? Revaluing the 8,133 metric tons of US treasury gold. Now, some people say the US don't have it, they have some of it, whatever. Oh, the way I see it is as long as US allies like Japan, Europe say the gold is there, you guys are fine. Okay? Like, you don't even need, like, yeah, exactly. Exactly. So, they're not going to listen, they're not going to have a TV crew with a video camera go in there to each vote and show everybody. It's not going to happen. Okay? It's going to be like representatives, probably from US allies. A bunch of accountants go in, take a look at it, sign off on it. And I mean, then it's just a matter of belief, right? So if they have the 8,133, which they say they have, they revalue it at 8,000 US dollars, they get $2 trillion out of that. Some people say that's not enough because national debt is 38 going to 39 trillion. They don't understand how this thing works. Okay? The people who say that because first of all, the US government can do this more than once. They can do it 8,000, they do it in 20.
Oh yeah, as long as they don't get rid of the gold, they can continue to revalue it, and they can do it mark to market. They can also select a price. There's some consequences to doing that, but that can happen as well.
Yeah, I think they're going to do the market thing because then you have like neutral, physical gold flows and also fiat, US dollar flows internationally. If you do it market, if you select a higher price, then they got to defend. They got to defend it, right? They got to print money to defend that, which defeats the purpose. So I think it's going to be market, and then they have like the Fed, um, you know, um, take the gold certificates off the hands of the US Treasury. Okay. So the US Treasury issue gold certificates that are equal to the market new price of the 8,133 metric tons of physical gold. And then the Fed would give, basically deposit 2 trillion US dollars of, that physical gold value, that $8,000 per troy ounce at that point, right? I'm hypothetically speaking, at that point it's 8,000. So $2 trillion to the TGA, which is the Treasury General Account. I'm sorry if it sounds confusing. People can go on to my X. I have like a detailed explanation of this, step by step. Makes it easy. So anyway, the whole point is that $2 trillion will probably won't solve all the problems, okay? Like, I'm not crazy. I know there are 38 trillion dollars, 39 coming off national debt. So 2 trillion is not going to solve all the problems, but it will allow them to kick the can down the road. Okay? So that's number one. Number two is that once they revalue it, let's say at $8,000 US dollars per troy ounce, guess what? That's the bottom price for gold. Okay. So in the past, in history, whenever the US Treasury revalue physical gold at a dollar amount, the physical gold price never dropped below that price.
Well, and technically, they should be changing the denomination on gold coins. We'll see what they do with that, but
Yeah, technically they will do that. So anyway, my whole point is that that's the bottom price. So imagine, Jared, if like people talk about FOMO, right? Imagine what would happen if they revalue 8,000. A lot of money is going to go into gold because like the thinking will be like the US government got my back, right? So I'll give you an example. Like Nixon. Nixon revalued gold the second time in 1973 um at 42.22 US dollars per troy ounce. Like back then that was like near the market price, okay? 42.22. That thing went up to $200. Like, at I think the end of 1974. So within like less than 2 years. Like what's that? That's like 4x, right? Think about that. Think about that. Think about that. After revaluation, because people were like, just a sane person, look at that, and would think the US government got my back. and you buy as much gold as you can get your hands on, right? So I think it's going to happen the same this time. If they revalue at 8,000, we might see 20,000 US dollars go very quickly. Now, then comes the question: is the U.S. government going to revalue a second time at that point, or they have enough? Yeah, exactly. So like, but once it gets to 20,000 or 15,000, are they going to revalue a second time, or are they going to do pull a Paul Volcker like in 1980 and rug pull the entire thing? You see, so we don't know that. That's for like a little bit far out, even if it's like 2 3 years. But both possibilities are possible. Okay, we don't know.
So looking at that, Eric, what's your advice to people? We have a lot of stackers. So, I look at things from stacker, investor, and trader mentality. So I would say, if people watching the channel, majority of them are stackers, or can put themselves in that bucket. A lot of them still put themselves in an investor bucket. They have mining stocks. They may also be buying some gold and silver they plan on selling to put into other assets down the road. We have a few traders, but not a ton of traders. So we usually don't get into a lot of charting, but we do talk macro on the channel. So I know there's a lot of people that are holding a lot of silver. Some of that is due to them not having enough money to buy gold, and they're hoping that their silver goes up and they can play the ratio to trade over to it. Others are holding a lot of silver because they believe that silver is going to outperform gold over this bull run. What you've just described, I think, is a really good case for why you want to have gold. What advice would you give to people that might be stacking a lot of silver that are looking to either play the gold to silver ratio or maybe waiting for silver to get to a certain point before they move into gold? Is there any cautions on that? Is there any thoughts or ideas on strategy you might have?
Yeah. So gold, like I said, is a I was in another program recently. I said for gold, it's almost like everybody wants gold to go up. U.S. government, Chinese government, um, individuals, in what is it? Institutions. They all want gold to go up, right? I don't see anybody who wants gold to go down. But silver, like the industrials, they don't want silver to go up. I mean, it's their input cost. Why would they want $600 silver? I mean, they will kill their business, right? Um, you know, Western bullion banks. If you're like a European bullion bank, you net short silver. I know they pay the spreads, and they're mostly supposedly position neutral. Okay, but like if they're holding promissory notes at the LBMA, and it's just a piece of paper, they can actually get the physical, and they got to ship some back to the COMEX, even though bilateral data we don't see that. Okay, um, they might not want the price of silver to go up that quickly. I mean, as we have seen, right? Like it's almost like a controlled, you know, um, ascension. Okay, like it's going up, but it's controlled almost. You know, am I right? Like what we're seeing here, right? So if silver get out of hand and it overshoots, like I said, I see it being dumped back down, just like what we saw back in what, December, January, when ran up to 120, 130, almost 130, 124 or something, and it dumped to 60, 66, right? 64, 66 intraday. Okay, so like that's almost a 50% dump. Okay, so what I'm saying is that if you're buying silver right now, is probably not a bad time because we're not at the peak, right? So you buy like when it's not at the peak. You don't buy when it's FOMO, but expect this thing to be like a wild, 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 wild ride, because gold may correct like 20% or 10%. Silver can correct 50% at the drop of a hat. Does that? What do you think? Does that make sense to your audience?
I think so. And what I would say, guys, is if I don't really play the gold to silver ratio actively, meaning when it hits a certain point, I just automatically sell a percentage or trade and try to move into it. I mainly look at the ratio to make an understanding of, am I going to buy more silver right now or more gold? And I look at it more as a percentage that way. Now, when I go to things like a coin show, I did sell some gold and I sold some silver. We bought a lot more silver. We actually bought a decent amount of gold too. When things like that are happening, it does kind of even itself out with the ratios because of just what everybody wants to do. So the caution I'd give you guys, if you have a lot of silver and you're wanting to get some gold, which I highly recommend because I look at gold as wealth insurance. And I also look at it as savings. I look at silver as SHTF. Let's say, there's a major disruption to the banking system and we end up bartering with silver for a period of time, or we get into some of these other crazy type situations where you might use it for trade. Having smaller denominated and fractional silver is great for those situations. The rest of the silver, in my opinion, is speculation. So when you look at speculation, you want to make money off your speculation and turn it into savings or into wealth insurance. And for me, it might even be real estate to produce cash flow. So, the thing I'll just caution you guys on is as we see the gold and silver ratio playing, it's going to be dancing. You're going to see it go up higher. You're going to see it go down lower. Anytime you're seeing it down below 40 is a great time, in my opinion, to be trading from silver into gold. Anytime you see it above 70 is a good time to be going from gold into silver if you don't have silver and you want some more and you want to play the speculation. Otherwise, to me, it's always an accumulation game of more gold. How do I get more gold? And silver helps facilitate that. So that's just my opinion, but that's kind of where I look at it. Gold is the end goal. It's not silver, in my opinion. Now, there's other people out there that have differing opinions about it and think silver's useful and gold just sits there so it doesn't have it. But to Eric's point, that you made just now, everybody wants gold to go up, and a lot of people want silver not to go up. And so you're going to have those dynamics you're going to have to fight against. So Eric, kind of in closing here, I know we had a lot of pictures that we were sharing here that we didn't totally get to, but I do want to pull up one more here because it is this is going to be the Strait of Hormuz. We're talking a lot about Iran right now and oil, so I want to hit this just briefly for everybody. Can you share with us a little bit of your thought process on where oil's at? I know some people are expecting it to spike up. Others may be thinking, hey, do I sell some of my silver stocks and maybe other equities and move into some of the oil stocks? But how can this affect things like gold and silver price? And what do you think really is going to happen here?
Okay, I'm just gonna say this, right? Like 2025, every day on a daily basis, there's a 2 million barrel per day of oil surplus. Okay, that's why oil was languishing, like 60 something for the longest time, right? Because there's a global oil surplus, 2 million barrels a day in 2025. It's projected for that number, if like there's no war, nothing happens, right? Just like 2025, it's projected that that number goes to 4 million barrels per day in 2026. Okay, remember that. So from 2 million to 4 million barrels per day of oil surplus. Okay, okay. So okay, let's say this war happens on the weekend, and the the American carriers with their bombers just rain missiles on Iran, and Iran shuts down the Strait of Hormuz. Let's just say that happens. How much oil goes through the Strait of Hormuz? 20 million barrels a day. 20 million barrels a day of oil. So that goes to surplus, right? Plus another 16 gone. So like I mean, it's a complex situation. That's why, like me and you were talking offline. We were looking at the oil price, and I mean, like it's going up a bit, but hell, silver is going up more than oil right now. Silver is, I think, up today 7%. Looking at it right now, $94, and Yeah, yeah. So crude is only up like 2%. So think about that. Because everybody's looking at the same thing I'm looking at. Okay, Jared? They're looking at like, okay, if I bet big on oil and the US government has complete control, let's say, of the Strait of Hormuz, okay? Um, guess what happens? Like you hold a lot of long leverage, long oil positions, you completely screwed because it's 4 million barrels surplus per day. Yeah, exactly, right? So like it's almost like it's kind of like betting on the roulette table, basically, right? So like I don't know, I don't touch oil. I own a lot of uranium stocks, okay? Uranium. Because uranium is kind of like a energy play as well, but the price of uranium miners are more is more positive than oil companies because like uranium is like a different format of energy. Basically, it's what they call base power. Okay, it's not like the same energy output as you get from oil. Um, so if you look at the uranium charts, it's kind of like when oil was languishing, uranium went up, uranium miners went up, especially now that the U.S. is trying to reshore all this, like energy production, etc. Right, for base energy back to the U.S. So I buy uranium. That's my energy play, not oil. Oil is just like to yeah, yeah, correct. Yes, yes. But anyway, so the oil thing, I think, yeah, it might spike. It might spike. But like, I'm old enough to remember this. I think like when the war on Iraq happened for the first time and the second time, right after war broke out, and the insiders realized that the Americans got it in the bag. Okay, oil price just dropped like a rock. Am I correct? Because they once they realize that you guys are gonna win, okay, this like Iraq just don't have no chance against the U.S. military. Oil price just dropped because you know it's in the U.S.'s interest to contain oil price. I mean, not to trash it because now you guys produce your own shell oil, right? So you need like a minimal price level to sustain that. But yeah, well, there you are. But you don't need it above 100 either. That's my point. So, so there you have it. So I think I don't know. Like I mean, oil is risky. I don't know if that would resonate with your audience. That's my whole point. It might go up, but like one day, yeah.
I think it's good for them to hear it. I don't have any oil stocks right now. I'll just put it that way. I know a lot of people are thinking it's time to jump into it and get after it. I think it's a play further down the road after we see prices of gold and silver go up higher. To me, it's probably something that comes after we even see a revaluation of gold. At some point, all that printing of money or all of that debt, which is really the same thing, guys, that's going on. We're going to be trying to counter that to do other things. President Trump's talked about a sovereign wealth fund. Um, you know, that $2 trillion can go to paying down debt. It can also go to buying more assets. There's a lot of different things it could do. So I'm really curious to see what happens with that. But I think higher oil is going to be something that's a little bit further down the road. Maybe we have some spikes if we end up with a conflict here. Um, but yeah, I I'm mostly looking at gold and silver right now because I can see what's going on with them. I can see the market. I can understand what needs to happen with them. I think uranium is also another good one to look at. I don't have any uranium stocks at the moment right now, but if you want to get into energy, I think that's one worth looking at. Do your own research on that too. But Eric, I want to thank you for coming on today. We covered a lot of stuff for everybody. So if you guys have any questions, let us know. I'll have a link to Eric's X channel down below in the description. If you guys haven't done so, please hit that subscribe bell icon so you don't miss notifications. Also hit the thumbs up so that more people see the video, and then leave a comment. That kind of locks you in. YouTube likes to unsubscribe you from videos if you haven't been participating as much. And everybody stay safe. And until next time, peace out. And Eric, thank you very much.
Thanks, Jared.